Investing gurus like Warren Buffett always says to buy and hold the S&P 500 for life, and I just sold my entire portfolio. For context, I've been invested into the S&P 500 for the last 5 years, and I finally decided to cash in on the big dough. This was a 5-figure investment I did many years ago when I first started working, and I didn't invest another dollar after that, which when I think about it was one of the many regrets. So in this video, you're going to find out exactly how much money I made investing into the S&P 500, what I'm investing in next, and how you can learn from my mistakes to earn much more money in the future. So the million-dollar question that everyone must be thinking is, how much money did I make investing into the S&P 500 for the last 5 years? This is how the entire journey really started. Truthfully speaking, I wasn't really a big fan of the S&P 500 index fund investing 5 years ago. Why? Because I was a foolish young person in my 20s thinking about becoming rich as fast as possible. Index funds which only give you 8 to 10% returns were, for lack of a different word, really boring, you know? At least for me at that time. So as a young person back then, I feel like I could have done better and I could out-earn the market any time of the day. Just give me a stock chart, I can read the technicals, I can listen to the news and everything, and I can plan and predict whatever that's going to happen in the next 6 months, 1 year, and I could definitely beat the market hands down. Just one good trade and I could possibly make 20 to 30% and I would beat the market, right? That was when I attended an investing seminar by Value Investing Academy here in Singapore. The owner, Caden Chung, was talking about how much the S&P 500 was earning over the last 20 to 30 years or even more, and it consistently showed good gains all throughout this entire time, and all you needed to do was just to stay invested, put your money in consistently, and you'll be earning money all the way throughout this long period of time and retire without doing anything extra. So that's when it opened my Asian ass eyes just a little bit, just to see the world differently. But I wasn't quite sold on the idea just yet. In a way, I guess narrow-minded and arrogant that you are when you're a bit younger. Fortunately, one of my superpowers is that I'm relatively open and I love to learn new things. So I decided that I have 2 portfolios instead. One will be this long-term S&P 500 boring portfolio and another short-term day trading portfolio so that I could see and compare how they both would do. Spoiler alert, I wish I had invested more into this damn index fund back then because the last 5 years has been nothing but a crazy bull run. I would have made so much money just staying invested and not touching my money at all. So from this graph here, you can see that I started my initial investment in 2019 and I think I invested around $1,300 for the first 3 months, depicted by the yellow line. Then it stayed flat all the way because me thinking that I could do better decided to ignore this portfolio and just focus on day trading. So of course, no more money was put into it, but as you can see from the blue line, the portfolio was constantly growing. So the yellow line is how much money I invested and the blue line is how much the portfolio was growing over this whole period of time. Only when it hit late 2022, I started putting money in again because I saw that the markets were recovering post-pandemic and I kind of FOMO in a little bit. I invested until 2023 and that's when it kind of flatlined again because I kind of lost interest in this long-term boring portfolio, right? But that brings my total invested money to around $14,809. After 5 years of passive investing and not touching this money at all, I just sold it last month and the portfolio was worth $22,388. This brings the total profit to $7,579, which is around a 51% profit. Which is crazy, right? 51% over 5 years, which means consistently almost 10% every single year. I know. If I invested $100,000, I would have $150,000 right now. I'm still biting my ass a little bit about it, but you can't do much about it because it's just lessons that you have to learn along the way. Now that you've seen the entire portfolio, then comes the question, why did I sell this portfolio? Even the legendary investor Warren Buffett says that 90% of people should just own the S&P 500 and never sell it, and yet I just did the opposite. See, around 5 years ago, it wasn't so easy to invest into the US stock market. Not many Singaporean brokers allowed you to invest in the US stock market, so you had to sign up for foreign brokers like TD Ameritrade, Interactive Brokers, and many others, which charge high commissions as well. So back then, it was very difficult and expensive to invest into the S&P 500. Nowadays, we have brokers like Momo Singapore, Longbridge Singapore, and many others that I regularly talk about on my channel, and investing into the US markets is as easy as a click of a button. So back then, I was investing into the S&P 500 through this website called DollarDex. So it was an indirect way of investing because they have a fund called the Infinity Index Fund, and that invests directly into the US Vanguard Index Fund. I no longer want to do that because a better fund has presented itself right now, which is the CSPX Index Fund, available on Interactive Brokers. 2 main things come into play, which is the expense ratio and the dividend withholding tax for both of these funds. So expense ratio is basically you invest your money with these fund managers, they manage this whole portfolio, and in return they are charging you this one small flat fee for managing this entire portfolio. So the Infinity Fund has a 0.475% management fee and 0.7% expense ratio, while the CSPX only have a 0.07% expense ratio plus management fees combined together. So this is the first big advantage because it costs less to manage the same freaking fund, which makes no sense, right? You obviously will choose the one that's cheaper and more efficient and is going to give you more money overall. The second one is the dividend withholding tax, and this is something that US does, which is it takes 30% of the dividends you earn as tax. The Infinity Fund has the normal 30% tax, while CSPX, because it has an Ireland treaty, only has 15% tax. Now I know exactly what you're thinking. All these things are super small, right? Why not just continue with my old way of investing? Well, just like any of your small bills, like your handphone bills, your mobile subscription plans, you can always go for the $20 prepaid SIM card, or you can go for like the $70 one where they include the phones and everything else, right? And then you think about it, like it's such a small difference early on, right? Like it's only $50 difference, but if you compound that over the last like 1-2 years that you're using your phones, that is going to be a lot of money. $50 times what, 12, you'll get $600 a year, and then 2 years will be $1,200. So with a small example like that, hopefully you can see the difference in the long term, how much bigger that $50 is going to be. That $50 is just basically going to cost you $1,200 more, provided you get a different service provider. So with that being said, prepare to be humbled, because I'm going to show you the exact math that goes behind this whole investing method using this AI tool, Perplexity. Whenever you guys have the time or the chance, please play around with AI, because whether you like it or not, it's here to stay, and it's also awesome at being able to make your life easier by answering any of the questions that you have about life. So let's put a couple of assumptions in place. Let's assume I invest $10,000 right now, and I continue investing at an average of $2,000 a month for the next, let's say, 34 years or so, which means the sum of money I would have at 65 years old for retirement, right? So if I put this same amount of money into these two funds and I assume an 8% yearly return, the Infinity Fund will earn me 2.8 million, which is not bad. Let's not discount it. I'm still an easy millionaire as long as I stick to my plan, right? Easy to some extent. But the CSPX fund will give me a total earning of $3.1 million, which makes the difference around $300,000, which is crazy, right? Just from switching funds like that. I'm sure if I told you that number from the start, you'll be like, yeah, for sure, sign me up, let's switch right now. But the calculation of these AI models may be a bit off here and there, so there might be some error, but the moral of the story is that by saving on these fees, you can potentially save yourself a few $100,000. So after selling this 5-year portfolio, what are some of the lessons learned? Lesson number 1, definitely be consistent and start investing as early as possible. Remember how I was able to earn just a 50% return just by putting my money in for the last 5 years and not do anything at all, right? It's crazy, right? So little effort and you make so much money from it. Sure, the returns might change, but ultimately the more I had invested, the more money I'll be able to cash out in the future or even right now. So if you're still on the fence, thinking about whether to invest or not, screw it, just get started. You might lose some money in the short term, but if you look at the charts of the S&P 500 long term, they've always been moving up, and you almost, and I use the word guaranteed, to have a bigger portfolio in the future. You never know, you might be in this, or rather we might be in this generation where, wow, we just damn unlucky that the S&P 500 is just going down, and everybody who invests, they're going to lose money in that sense. There is always a possibility of that happening. However, what about probability wise? We're talking about that. The probability of you, for things to stay the same course and, get your portfolio increase over time, like what's happened over the last 10, 20, 30, 40 years, is higher than it going down during this entire generation of yours. And that's what everyone's afraid of. What if when I invest, I lose money, right? I have the same thoughts as well, but it's not going to stop you. You must really think that the probability of it going higher is probably higher than it going lower in that sense. Lesson number 2 is to consider very carefully when it comes to a long-term investment. These fees that I previously mentioned makes a world of difference and a few $100,000 of difference at least after 30 plus years. I was already being a bit more conservative at about 8% annual growth for 34 years. If you invested earlier, like early in your 20s, or invested for 40 years for example, and let's say the stock market did better at like 10% annual growth, the difference might even extend to $500,000 or even more. So definitely consider these fees when you're investing in something for the long term. Lesson number 3 would be to widen your horizons when it comes to investing your money in the stock market, and to be patient overall. Because I was so short-sighted and arrogant that I thought I was so sure I could beat all the most intelligent stock traders in the world at trying to beat the market returns. But the truth was that in order to accumulate a good amount of wealth, you need to let time do its magic and stay invested in the stock market no matter the ups or the downs. In fact, the downs give you a bigger opportunity to buy more so that it lowers your average price and you get to earn more when the markets recover finally. Even our legendary investor Warren Buffett only made 90% of his wealth after his 65th birthday. I was trying to earn all that money in just a few years, when this old guy is getting his bulk of his wealth only when he's at our Singapore's retirement age. Everyone's trying to become rich so quickly and we just ignore how much time it takes to get wealthy, and sometimes things really need to take its course and you need to put in effort and be patient along the way. So hopefully this video gives you a bit more insight on how I'm investing in the long term now and how you can kickstart your journey to invest in the stock market. I know you're scared and you're not alone. We are all scared of losing money, I can assure you of that. But what separates someone like me from everyone else or even you watching this video? I don't let the fear get to my head, I do my homework and I take action by starting to invest with a small amount of money to get my feet wet. I'm still scared of losing money, but I'm more scared of not having enough money to retire in the future. If you have those fears too, stop bitching about them, take out your laptop, start doing a bit of homework using AI because it's so easy to do it nowadays, right? Don't give the excuses that it's so difficult to know about something or to learn about something anymore, and really just get started. If you enjoyed this video here, then you'll probably enjoy this video here on the Longbridge Singapore app tutorial for beginners. Thanks for watching, have an amazing day as usual, and I'll see you guys in the next few videos. Bye bye.